morning to you. I'm Jeff Slakey. Well, yesterday, the IRS began accepting electronically filed tax returns for the April 18th deadline for tax day. I'm happy to have on the air with me this morning from Wittenberg CPA, the man himself, Mike Wittenberg. Good morning, sir.
Good morning, Jeff.
How are you?
Doing well. How are you doing?
I'm well. Happy New Year.
Happy New Year. Here we go.
Man, I thought there was at least some time of the year where financial folks, especially in your industry, get a little bit of a break, but it doesn't seem you're always working.
It's either doing what we do for compliance, or it's getting ready for the next year, or it's doing the off-season kind of firm planning and such. So yeah, it's there's always something on the plate.
My goodness. So as I mentioned, yesterday was the first day that the IRS began accepting electronically filed tax returns, and I guess there are folks out there that already have all their stuff ready to be filed at this point.
I've prepared a couple already, and we don't do a lot of simple returns, but those folks who have a W-2 that can go online with the IRS or go to an H&R Block kind of office, sure, you can get those done, and the IRS is ready to accept them.
Let's talk about a couple of the changes this year. The first one is tax returns that also include pass-through entities. There's another change here?
Yeah, so what was requested and what was accepted by Congress when they passed the last piece of legislation about tax law was to delay the corporate deadline. So entities that are large, that are the Microsofts, the Gs of the world, get until April 15, which this year is April 18th because of the weekend and the holiday. Mm-hmm. But the trade-off there was that for those of us who work with entities that are pass-throughs, which would be LLCs, partnerships, S corporations, those folks, we have to get their filings done, all of those filings done by March 15, or put them on extension.
Okay.
So it's kind of deferring the bigger companies, which made sense, to April 18th, and then pulling back some of the pass-through entities to March 15.
The other one that actually I was talking with Allison Malushnik from the Asset Building Coalition yesterday was that there has been some delays as people get all the additional information on the child tax credits and the earned income tax credits.
Yeah, so what the intent here was there's been a lot of fraud. People read about it. People either unscrupulous preparers preparing returns without legitimate people behind them, let's say, or individuals trying to file and take advantage of some of these credits because they're refundable credits. And so the IRS said, Congress said, and the IRS agreed, let's slow down the process of issuing these refunds. We'll accept the filings. We're going to process them more thoroughly. Let's wait until, they're saying about middle of February is when they're going to start issuing some of those refunds where earned income tax credits or additional child care tax credits are involved. Because, once again, those are refundable type credits.
And some of these situations are perhaps even also when one family in a divorced family, one person will claim 1 year, one person will claim the other year, and then forget or somehow.
Can be one of the most interesting situations where you're trying to coordinate with maybe a former spouse who's not as cooperative, trying to figure out who's on first with dependents. And coupled with that, of couress, are education credits for college-age kids, where you have to track down where's that kid and where'd that credit go and where should it rightfully go.
Oh, wow.
It's an interesting chess match.
All right, moving into 2017, let's got some reminders. Let's start with some reminders for business owners.
Yeah, so a couple of quick things. I just wanted to point out the obvious about the increase in the state's minimum wage. So state of Washington employers pay attention that $11 is the effective hourly minimum wage for this year. It'll be increased over the next 3 years, actually, but that's the first step in the increase. And one thing that often, this is kind of one of those challenges for compliance for a lot of companies, is that 1099 compliance, where you're a company, you pay service provider, whether it be computer tech, whether it be a legal fee. Those folks who receive those that compensation from your firm need to receive a 1099. And what that 1099 does, of course, is it confirms how much was paid to what individual with their tax ID. So it's a tracking mechanism for the IRS to know who's receiving all these fees. And of course, for the company who pays them, it's important to be in compliance to show that you did pay those fees, and that's the tracking mechanism as a 1099. Now, new this year, which is unfortunate for those of us who work with businesses that have to prepare 1099s, is that they must be all filed by the end of this month before you could have more time, additional time to have those filings made. And I'm not talking just to the recipient, but actually with the IRS. So IRS and the recipient are both supposed to receive those documents by the end of this month.
Wow.
So they've really accelerated the process, which of course puts the crunch on businesses to get after those 1099s.
Interesting. What about for individual taxpayers?
So individual taxpayers, just once again reminders, because thankfully there aren't a lot of changes for this past tax year. The ACA, Affordable Care Act reconciliation process, which the IRS reluctantly has to take care of for individuals who are, primarily it's those folks who go through the exchange, and those folks who go through the exchange may get a credit, which is an advanced premium. And so when I prepare a return involving somebody in the exchange, there's the reconciliation of how much was received in credit, how much should have been received based on your income. Is there a payback, or is there a recovery of perhaps more premium? So it's one of those things where the ACA law required that IRS be involved in the compliance aspect of the law. Another thing, just to remind you also, is that those of us who are maybe having change in family circumstances, whether it be a change in your marriage, children, additional deductions you might be eligible for, is that you want to look at updating your W-4.
Okay.
And most employers really should pass those out annually, in our opinion. We do a lot of payroll compliance for our business clients, and we always advocate for get the W-4 out, make sure all the employees know what their withholding status is. If they need to make changes, let's do it at the beginning of the year if we can.
And so you can change those often?
You can change them when you want to. Usually, I would say at least at the beginning of the year, because that's when hopefully you know how last year may have shaped up. You may do a quick estimate of how your taxes are going to be looking going forward. So it's a good time to get things set correctly.
Oh, okay. New year, new president, new administration. There is a lot of questions out there for folks on all sides, in business, in individual. Now when it comes to potentially the Affordable Care Act and things like this, what have you been hearing? What are some potential changes for this upcoming year?
Yeah, it's going to be very interesting as the year unfolds. We're all kind of pins and needles because we have, sounds like a president who's willing to make changes. There have been proposals in the past when you had a Democratic president and a Republican Congress. Now you've got both Republican in both positions. So we'll probably be seeing some changes. How much is really what I would be looking at as far as changes. One of the things that has been kind of the most often talked about, and probably the simplest thing to do, is to flatten out the brackets again. Back in the Reagan years of his presidency, he promoted a pretty simple three-rate program for tax rates, and this is the same as what's being presented under the Trump administration, or at least a proposed idea. He's hoping for a 12, a 25, and a 33% bracket, whereas now we've got about 5. And so we go right now from 10 all the way up to 39.6. Mm-hmm. This would flatten down the bracketing, so fewer options for the taxpayer.
Okay. And then corporate tax rates, that's always another big conversation to be had, and new administration, probably some new ideas here.
Yeah, so corporations, there's a lot of talk about those who aren't paying their share, and some of the big corporations truly haven't been. When they keep money offshore right now, they're not required to bring it back, therefore they're not required to pay U.S. taxes. So the big discussion has been, how do we motivate corporations, especially the bigger companies, to bring their money back onshore, repatriate they call it. So the idea is that if we can flatten our U.S. tax rates down and simplify the code for even the biggest companies, the GMs of the world, the Microsofts of the world, then they'll repatriate this money, and then at least we'll get the tax rate that we should get at a lower rate, sure, but at least there'll be taxes that'll be received by the Treasury. Mm-hmm. So that's the motivation. What's really interesting, though, is that not only for the big guys in Trump's proposals, President Trump's proposals, he's also talking about the pass-through entities. Now, pass-through entities, as we're talking about them, the tax burden ultimately falls on the individual taxpayer. So at the company level, you're not paying the tax. He's talking about when the recipient individual receives that pass-through income from that entity, that's where the rate's going to also be reduced. And they're hoping for, they're talking about a 15% proposed rate on that income. Well, that income could be, I have clients that may pay at the top rate. They may be in that 33 to 39.6% rate. So if this legislation or this proposal actually becomes law, it's going to be a significant benefit to even those small companies.
Mm-hmm. Wow. And the other proposal that is often talked about as new and Republican-specific administrations come in, the elimination or repeal of the estate tax, the death tax that people sometimes talk about.
Yeah, I think those who don't like it love to call it the death tax. It really is truly an estate-level tax because you're not paying it's not a pass-through tax, it's paid at the estate level. So if somebody passes, they have the ability, and under current law, they have the ability to exempt over $5 million at the federal level, over $2 million at the state of Washington level. Those used to be linked, and I hope at some point in time they're recoupled because it's confusing for someone to come in and have a loved one who's passed and have the discussion of, well, the federal level you're fine, but at the state level, we need to look at taxation at the state of Washington level. So I'm hoping they recouple those exemption levels.
Interesting. Well, you can find out more as you can start filing your tax returns electronically now through April 18th. And if you need help, a great guy to get some help is with Mike Wittenberg. Find out more at wittenbergcpa.com. He's on Railroad 426-0230. And why don't you come on back throughout the rest of this, at least first quarter here, to talk about some of these changes. Be really interesting to kind of see how it all affects us on the down home level.
Yes, you and me both. We're going to be dialed into these changes, and I'm sure there's going to be quite a few.
Very good. Mike Wittenberg, CPA, thank you for coming on today.
Do you know you have access to the fastest internet in Washington State? Switch to iFiber Communications right now and take advantage of our special offers. Pay only $29.95 for 100 megabit high-speed internet, or get 3 months of internet absolutely free. That's right, $29.95 for 100 megabit speeds or 3 months of internet free. Shop, stream, and game like never before with iFiber Communications high-speed internet. Call 360-427-4000 or check us online at ifiber.tv. Subject to credit approval, valid on a 24-month contract.